This is the video for question 8. Discuss the 4 options for administering taxes and the pros and cons of each in relation to justice. Now, most of you, when you think of taxes, don't think about ethics and justice. By the end of this lecture, I hope that you will, and that you will begin to see economics in general as a part of ethics. You'll find most of what Mill has to say about taxation on pages 58 and 59 of our text. The short story is that Mill sees 4 possible methods the government could use in deciding how much each of us owes in taxes. These are, just to name them, 1. Proportionate taxation, 2. Graduated taxation, 3. Absolute taxation, and 4. Mixed taxation. Let's get clear first just on what each of these terms means. Proportionate taxation would mean that each person would pay the same percentage. Each person would pay the same percentage of his or her income. So let's say everyone would pay 15% of their income regardless of how much they make. Mill says this form of taxation is, quote, in numerical proportion to pecuniary means, end quote. Pecuniary means relating to money in his 19th century form of English. Graduated taxation is a system whereby people who make more money are taxed at a higher percentage. So for example, someone who makes $30,000 a year, maybe a housekeeper, would pay only 10% of their income in taxes, but someone who makes $50,000 would pay 15%, and finally somebody who makes $250,000 a year might pay 20% of her income in taxes. It's called graduated because it goes in steps. Once you reach a certain higher income level, you graduate to the next higher tax bracket. Next, absolute taxation is a system where everyone pays the same absolute amount in taxes regardless of income. This is like proportionate taxation, except that instead of the case of absolute taxation, it's the dollar amount. In the case of absolute taxation, it is the dollar amount and not the percentage that is the same for everyone. So someone who is at the federal poverty level, currently around $12,000 a year for an individual living alone, would pay the same dollar amount as someone making $250,000. Mill compares the absolute tax to a club membership, where everyone pays the same dues for belonging to the club. Finally, there is mixed taxation, where everyone pays the same amount for their personal security, meaning the police and the military, for internal and external threats to our lives. But people pay different amounts for the protection of their property, which is unequal. Somebody with a $24 million estate in the Hollywood Hills would pay much more to the government to protect their house than someone who owns no property and shares an apartment in Palms. So mixed taxation combines the absolute tax with the graduated tax. It's also interesting just to know what kinds of taxes we have in the United States, California, and in Los Angeles County specifically. Federal income taxes in the United States are graduated. The more you make, the higher percentage of your income you pay in taxes up to a point. State taxes are graduated as well. Property taxes in the county are different. If you own a house or even just a piece of land, you pay 2 separate types of tax. You pay proportionate taxation on the value of your property. Here, it's 1% a year. So if your house, let's say, is worth $1 million, you owe $10,000 in base property taxes each year. If it's only worth $300,000, your base property taxes are $3,000 a year. But you also have what are called assessments, like the 911 assessment, which is the same for all property owners and is added to the base rate. Other assessments include ones for community colleges and for replacing old water mains or for building a new power grid. So the county property taxes are very close to what Mill calls mixed taxation. I'll come back to that point. If you rent a room, apartment, or house, you pay no property taxes, but your landlady or landlord does. And of course, they pass the cost on to you in higher rent. Now, it's important to know that Mill does not advocate for one of these four options for taxation. Well, not exactly. He does think that in a sense, the absolute tax or the mixed tax are fairer than the others on the surface, since they each involve the idea of equality. But that's not really his overall point. Overall, he wants us to understand the ethical implications of the different systems of taxation. Now, when talking about these ethical implications of the way governments structure how they assess taxes, it's helpful to know two important terms: progressive and regressive taxes. Taxes are considered regressive or progressive depending on their effects on the poor. There's not really a middle ground between these two, since almost all taxes turn out to be either progressive or regressive. Regressive taxation is a system that not only keeps poor people in poverty, but that tends to drive them further into poverty. A regressive tax makes the poor even poorer, and it typically makes the rich richer. It disproportionately affects the poor. A progressive tax, by contrast, is one that gives the poor an opportunity to get ahead. The effect of a progressive tax is to redistribute wealth, meaning that it takes some money from the wealthy in order to subsidize the lives of the poor and help them move forward. Let's look at the four systems of taxation that Mill has mentioned and see if we can classify them as either progressive or regressive systems. Proportionate taxation, where everybody pays the same percentage of their income in taxes, sounds very fair at first. Should we say that it is neither progressive nor regressive? Well, let's look at the effect of proportionate taxation on two people in two very different financial situations. Let's say they're both single for the sake of simplicity. Person A earns $100,000 a year as a corporate attorney early in her career. Out of that amount, she's able to pay the mortgage on her condominium in Playa Vista, lease payments on her BMW 5 Series, premium health insurance, 2 vacations a year, including 1 international trip, and she buys organic groceries at Whole Foods. That's if she pays no taxes. Let's say under proportionate taxation, she pays 15%, which is $22,500. It sounds like a lot of money, and it is, but she's still clearing $127,500 a year. She may not be able to afford quite as expensive a car. Maybe she has to downgrade to the 3 Series. And maybe she's only able to take 2 vacations a year if they're both domestic. But if she takes an international trip, she's reduced to just 1 vacation a year. She keeps the condo, her premium health insurance, and her organic grocery habit because she really values her health and security and is willing to sacrifice for them, as she calls it. Gas and maintenance for her car is a non-issue. One more factor, she pays 1% of the value of her condo in property taxes, but she's able to deduct this from her state and federal income taxes. That's person A, our attorney. Person B has an income of $40,000 as an administrative assistant. Without paying taxes, she is able to afford to rent a decent apartment in Lawndale, the maintenance and fuel for her 15-year-old Nissan, basic health insurance coverage, and her grocery bills. Of course, not at Whole Foods. She takes 2 weeks vacation a year, but for her, this means driving to Colorado and spending the time with her parents. She's only able to afford the gas for the trip because her parents do not expect her to help with groceries while she stays with them. Her landlord or landlady passes on the cost of property taxes on her apartment, but because she is not paying them directly, she cannot take them as a deduction on her state or federal income taxes. Now let's see what happens when person B is taxed under a proportional system. 15% of her $40,000 income is $6,000. Now her net income is only $34,000. Something has to give. She can't spend less on groceries or gas or her car, which doesn't have many years left on it anyway. Her vacation costs very little, so canceling it will save very little. She has two expenses she can cut and has to cut in order to pay her taxes: apartment and health insurance. Either she has to move to a less expensive apartment in a part of the city that is less safe, or she has to switch to a substandard health insurance plan. Proportionate taxation pushes her backwards economically. It has a disproportionate impact on her in comparison to someone who is upper middle class. She is only lower middle class. Imagine what proportionate taxation does to the genuinely poor. It pushes them further and further into poverty, while it has only a negligible effect from the upper middle class up to the truly wealthy. Proportionate taxation is a regressive tax because it has a disproportionately bad impact on the lower half, roughly, of the economic scale. Almost everyone agrees that proportionate taxation is unfair and unethical because it is regressive. Think about this one. Sales tax is proportionate to spending. Does that make it regressive? What is its impact on the wealthy versus the poor? Now let's turn to graduated taxation. Graduated taxation is, by contrast, a progressive system. It actually helps the poor by taking a smaller share, that is, a smaller percentage, of their income than it takes from people who are wealthier. This is where much of the controversy comes in. Progressive taxation tends to improve the situation of the poor in a society. It does this at the expense of the wealthier members of society. It reduces taxes for the poor and pays for these reductions by essentially overcharging the rich. It is a system that robs Peter to pay Paul, plays Robin Hood, and redistributes wealth. It essentially takes money from the wealthy to give to the poor. Graduated taxation typically does not just pay for tax reductions for the poor, it also pays for welfare, subsidized health care for the poor, etc., etc. So there's no disagreement. There is disagreement over whether graduated taxation is ethical or not. Remember that graduated taxation is what we have at the federal level and in most states. Republicans typically argue that the current graduated income tax we have is unethical for several reasons. First, it unjustly takes a higher proportion from the wealthy. It punishes them for their success. Second, it gives advantages to the poor that they have not earned. Third, it creates a perverse incentive for the poor to remain in poverty because if they progress up the economic scale, they will pay a higher percentage of their income in taxes and they will lose some of their advantages such as welfare, food stamps, and Medicaid. This last point is called moral hazard, which is when we create a situation where people are actually incentivized to do the wrong thing. On the other side, the usual Democratic argument is that we should make graduated taxation even more progressive than it is now for several reasons. First, the wealthy have an ethical responsibility toward the poor, especially if they have become wealthy as a result of employing low-wage workers, paying them less than their labor is worth, and by selling merchandise and services to poor and lower middle-class people. Unless all you are selling is luxury products, most of what you sell will be to people in the bottom half of the economic spectrum because there are so many of them. Second, the effect of the unearned advantages given to the poor by graduated taxation is to give them an opportunity to rise out of poverty. The idea is that we have an obligation to help those in need if we can, and Democrats argue that we can. They point out that all of us have benefited from unearned advantages, some of us more than others. None of us earned being born into a wealthy family, being born into the United States for that matter, which is ridiculously wealthy in comparison to most of the world. None of us earned safe and secure neighborhoods, good schools, etc., etc. Graduated taxation just spreads out the unearned advantages more evenly across the society. Third, no one is voluntarily poor, so the moral hazard argument does not apply. That's the typical Democratic argument. That's most of the story. Absolute taxation is, of course, a highly regressive system. If everyone paid $1,000 a year in taxes, this would mean cutting the champagne budget for the wealthy person, if that, and by contrast, cutting the budget for fresh fruits and vegetables for the person who is at or near the poverty line. Mill's mixed taxation is regressive by being a combination of absolute and proportionate taxation. Again, Mill is not in favor of one over another of these systems. Mill is not in favor of one over another of these systems. What he wants to equip us to do is to reflect about the ethical pros and cons of each system. Now, do you think taxes are an ethical issue?